Hello, ladies and gentlemen. A huge welcome back to everyone to the special weekend edition of Markets Around the World. My name is K2, and as usual, we'll be covering everything from the latest data and macro news stories to the key levels you need to be watching. If you love markets like we do, remember to subscribe and educate yourself better about how these markets actually work together. So, let's talk about what happened in the market, and the outlook too. Let's expand the conversation, starting with the news. President Joe Biden withdrew from the 2024 presidential race on Sunday and immediately threw his support behind Vice President Kamala Harris. Investors should expect a potential Harris administration to defend the economic policies that Biden instituted during his term. These include subsidies for electric cars and green energy projects under the Inflation Reduction Act, increased IRS funding to pursue wealthy tax evaders, excise taxes on stock buybacks, and a 15% corporate minimum tax for large corporations. President Joe Biden has officially dropped out of the race for president, injecting even more uncertainty into the outlook for markets at this increasingly critical juncture. The announcement came shortly before 2 p.m. Eastern on Sunday, roughly 4 hours before U.S. equity futures opened at 6 p.m. Eastern. Biden's decision followed days of mounting pressure from fellow Democrats and reports late last week that he was considering stepping aside. The second quarter earnings season is heating up, with Tesla Inc. and Google parent Alphabet Inc. set to report on Tuesday. Tesla faces uncertain electric vehicle demand amid potential political shifts, including Elon Musk's endorsement of Donald Trump for the upcoming presidential election. Investors seeking answers this earnings season are likely to be disappointed, as companies are still in the experimentation phase following lavish spending on new servers equipped with expensive NVIDIA chips. The AI boom has prompted firms to expand their computing capacity for compute-intensive AI tasks, but whether these substantial investments will pay off remains uncertain. The current composition of the S&P 500 index underscores this uncertainty. Semiconductor stocks, led by NVIDIA Corp. Just 2.61%, now dominate the index like never before. Their rapid ascent in weighting began last month, driven by growing investor optimism about the demand for chips required to support artificial intelligence technologies. Let's expand the conversation and check some data we have for this week. U.S. small-cap stock funds just experienced their second-largest weekly inflow on record. In the past week, nearly $10 billion flowed into U.S. small-cap funds, second only to the $14 billion seen in 2007, just before the financial crisis began. This coincided with a 12% rally in the Russell 2000 index from July 10th to 16th, marking its best 5-day outperformance of the S&P 500 in history. Meanwhile, the volume of call options on the Russell 2000 ETF, IWM, set another record on Tuesday, reaching 2.4 million contracts. Are small-cap stocks taking control of this market? This is interesting. Chinese investors dumped $42.6 billion worth of U.S. stocks and bonds in May, marking the largest monthly liquidation on record. This surpassed the previous record of approximately $39 billion set in Q1 2016, according to U.S. Treasury data released Thursday. Notably, more than 50% of the assets sold were U.S. Treasuries. During the first 5 months of 2024, sales by Chinese investors reached $79.7 billion, also an all-time high. Global investors are reducing their exposure to U.S. risk. A record 6.7% of U.S. homes listed for sale experienced price drops over the last 4 weeks. This exceeds the readings of 4.7% and 5.6% observed during the weakest 4-week periods of 2023 and 2022. The share of homes with price declines has grown due to a drop in demand as buyers await mortgage rates and prices to fall. Most recently, 30-year fixed mortgage rates fell to 6.8% on July 17th from 7.1% 2 weeks earlier. Meanwhile, the median house sale price is a substantial $396,379, just $100 below last week's all-time high. Buyers are rapidly disappearing in this market. The number of mentions of weak demand per U.S. company during earnings calls is now at levels seen only during major crises. Average mentions of soft demand have more than tripled in just 2 years and are on par with the levels observed during the 2008 financial crisis and the 2020 pandemic. Rising prices and elevated interest rates are the primary drivers of this weakness. The slowdown in economic activity was also evident in the latest GDP growth data, which came in at 1.4% in Q1 2024, down from 3.4% in Q3 2023. Consumers are feeling the impact of high inflation. Let's expand the conversation and see the heat map for the week. Microsoft saw a decline of 3.63%, while Apple fell by 2.70%. Nvidia and Broadcom both experienced significant drops of 8%. AMD had its worst week of 2024, plummeting by 17%. Amazon and Meta were down 5%. The fear index is currently at 49, which indicates a neutral sentiment. Will we see an increase in fear soon? And will the market continue to drop? The current level of the fear index, 49, suggests that investors are not extremely fearful or complacent, but rather in a balanced state. Whether fear increases or decreases depends on various factors such as economic data, geopolitical events, and corporate earnings reports. As for whether the market will keep dropping, that's uncertain and depends on future developments. Market movements are influenced by a multitude of factors, including investor sentiment, economic indicators, and external events. It's essential to monitor these factors closely to accurately gauge the market's direction. These are the most notable earnings for this week that I'll be watching, and I might even play some earnings myself. If you need to, please pause the video and take screenshots. Let's expand the conversation and look at the key events we have for this week. We'll start with... This week's key events include existing home sales on Tuesday, Tesla and Alphabet earnings also on Tuesday, services manufacturing PMI, and new home sales on Wednesday, IBM earnings on Wednesday, US Q2 GDP, and initial jobless claims on Thursday, followed by core PCE inflation data and consumer sentiment on Friday. All right, ladies and gentlemen, that wraps up this week's video. Hopefully you enjoyed it. If you found value in this video, please like and subscribe. If you have any questions, feel free to ask. Thank you for watching, and I'll see you guys later.